Yeah, I think, Thank you. Good morning, ladies and gentlemen. Sorry, I have quite a bit of technology in my hands here, so I'll do my best not to drop anything on the way. Thank you very much for the intro, and thank you very much for inviting me here this morning to speak about GCC VAT. I think you've heard a little bit of my background, but I suppose maybe just to add a bit of flavour, I've been living in Doha now for 8 years. For the last 3 years, very much focused on GCC VAT. I did spend quite a lot of my life living out of a suitcase, particularly 2-3 years ago, when some of the markets were implementing VAT. In terms of the presentation, I'm going to give you an update on where each of the 6 GCC countries are at in terms of their implementation. Then I'll focus on Qatar, and of course the burning question being, when is Qatar going to implement VAT? Just to highlight at the outset, I'm not going to answer that today. Okay, that's the one that we're all waiting for. Then we'll look at VAT in terms of how it works, how the GCC legislation is set out, and how it's actually going to impact on businesses. Then we'll look at different sectors, okay? So VAT impacts on different sectors, different business sectors in different ways. So I'll just give you a flavour for that. And then we'll look at an implementation project itself. How does that actually work? How does it impact on the organisation? And I suppose one of the questions I'd like to address as well is, how long does it generally take to implement VAT in a business? Okay?
It's working?
It's a bit split.
Can you try it now?
Yeah. Ooh, the title is a little bit. Apologies, just one sec. Can we get the title bit a little bit? It's a little bit off center.
PDF title, right?
Yeah. Can we get rid of the toolbar? No.
Wait.
Show or hide toolbar, maybe? Hide? Ah, that's the toolbar, okay.
Can you close?
Yeah?
This one, right?
It's a PDF. We open as PDF.
Auto printer? The auto printer, yes. Can you try it now? Full screen. Can you press Ctrl-0?
And this one.
What?
View mode.
It's just, it's splitting it kind of.
You didn't sound the
View
same.
mode. Single page. Yeah.
Can you try now? No? So it's not split now, but it's not working, right?
But you can do it from the laptop, so maybe I can just touch it from the laptop, right? That looks better anyway.
What? Not working?
Can we do page up, page down?
You'll have to click like 2 clicks.
2 clicks, okay. That's fine.
Maybe this one.
No,
It's not recognizing that.
it's not.
But if
Do you want me to stand up here?
No, that's fine. I'll be able to do that. No problem. It's
fine?
Yeah.
Sorry.
Okay, apologies. We're just trying to get the page sorted. I hope it's clear for everybody. So, just I suppose a few opening remarks. The introduction of VAT in the GCC was a monumental change in the tax landscape. It is a region that traditionally has not had a broad base of taxes. We had some countries like UAE and Bahrain, for example, which effectively had little to no taxes at all. VAT is a very complex tax because it is not a tax on profits like a corporate tax. Okay? It's a tax on a transactional level. Okay? Generally speaking, VAT is actually borne by the end-use consumer of a good or a service. So effectively what happens is VAT is passed along the supply chain from business to business. Okay? They add on the appropriate amount of VAT onto the selling price of the good or the service. And then the end-use consumer bears the burden of VAT because the end-use consumer is not making an onward supply. Now, generally speaking, it's not a tax cost to businesses because businesses can reclaim the VAT that they are charged along the supply chain. And I'll show you how that actually works in a couple of minutes' time. But because of the transactional nature of the tax, it's very complex to actually implement because it's not just a finance function issue. As you can imagine, if you've got something that has to be implemented at a transactional level, it's not going to just be the finance function that's impacted. So that's why an implementation of VAT within a business actually takes quite a considerable period of time. So you're going to have, for example, your IT function, your procurement function, sales and marketing, even HR is extremely impacted by VAT. And I'll explain a little bit about that as we go through the implementation process. So generally speaking, I would say as a rule of thumb, it takes about 12 months to implement VAT in a business. However, if you have a larger business, with multiple companies within a group, for example, it can take up to 24 months. And that's what we have experienced both in the GCC and outside the GCC where VAT was implemented. If you think even about changing your IT system and how long that takes, you can see where I'm getting the minimum of 12 months from. It really is a lengthy process, and it's really, really important to get it right because ultimately it's going to be the business who is penalised by the tax authority if they don't charge and account for the correct amount of VAT to the tax authority. So it can be extremely costly if a business doesn't implement correctly in the form of penalties, etc., issued by the tax authority. And we have really seen that across the GCC. We have seen huge reassessments raised in Saudi, for example, where we find the tax authority very aggressive compared to UAE, where they're not so aggressive, but they will get there eventually. Just a little flavour for you before we start. So what I look at first is where each of the 6 GCC countries is at in terms of implementation. So you're probably all aware that 3 countries have implemented VAT. So we had the 2 really large markets going live with VAT on the 1st of January 2018, that being Saudi and UAE. You might remember that I said a couple of minutes ago, generally it's a 12-month implementation period. The Saudi tax authorities released the legislation 6 months before the go-live date. The UAE tax authorities released the final regulations 1 month before the go-live date. Okay, so businesses really struggled to actually implement. because even though they knew it was coming, they didn't know the content of the final rules. Okay. So it was extremely difficult, and a lot of them have had to redo their implementations in a lot of cases where it was done in a kind of rushed manner, I would say, and maybe not necessarily correctly. Last year, we had the interesting experience in Bahrain. So the Bahrain tax authorities pretty suddenly announced the implementation of VAT for the 1st of January 2019 in October 2018. It's a small market, of course, but at the same time, the 3-month period was extremely challenging. I do actually remember staying in Bahrain overnight on New Year's Eve, just gone. I did an implementation for a telecoms company, and of course, as you know, a telecoms entity never shuts down. So once it goes 1 minute past midnight on the 1st of January 2019, people are going to be sending SMSs, they're going to be making phone calls. So that company had to make sure that the correct VAT treatment was being automatically applied on all of those transactions. It wasn't as if they could wait until they opened up for business on New Year's Day. Okay. Very challenging, and again, we do expect that a lot of businesses will face reassessments, etc., from the tax authority in Bahrain over the course of the next number of years. Okay. So the 3 remaining, I'll touch on Qatar at the end. Kuwait is likely to be the last country to implement VAT. They have some challenges there in terms of the parliamentary process. So there has been some delays in even getting the GCC framework approved. What they have said at this point in time is that it's likely to be at least 2021 before they implement. Oman is an interesting case. Oman is actually in a good state of readiness, and they have been for some time. But they were quite cautious in their approach. They want to make sure that they give plenty of notice to businesses, plenty of lead time for implementation. They still haven't confirmed exactly when they'll implement, but there's a good chance it's going to be in 2020. Qatar, again, is in a very good state of readiness. The legislation is drafted, it's ready. There's a lot of discussions between the General Tax Authority and some of the industry players, for example, in the oil and gas industry, international transportation, etc., in terms of the treatment that's going to be applicable for those sectors. Okay. Clearly, the energy sector is a massive driver for the Qatar economy, and those discussions are pretty interesting in terms of the VAT treatments that's going to be applicable. Because for some of those companies, while VAT is not a cost, it's a cash flow issue, and I'll explain that as we go through the presentation. As I said at the start, I can't confirm the date of implementation in Qatar because we don't know. It hasn't been announced as yet. Everything is ready, as I said, so all businesses can really do at this point in time is ensure that they're prepared, that their IT systems are capable of automating VAT, and if the government announces that they will be in the position to move ahead pretty quickly, possibly within 2020. The one thing that the Qatar government have said very clearly to us in terms of conversations with the Big Four, etc., is that they're not going to do what the other countries did. They're going to give at least 6 to 9 months to businesses by the time they announce up until the implementation date to ensure that there is sufficient time for businesses to be ready. Okay. So that's pretty much where we're at the moment. The next slide just looks at the legislative developments from a Qatar perspective. Okay, so we have obviously the GCC VAT framework. Okay, so that is the overarching legislation that governs the VAT laws across all 6 GCC countries. It cannot be deviated away from, but it does give a lot of flexibility in terms of the rules in each particular country, which is prescribed in the domestic VAT laws. Okay? So that was approved by the Council of Ministers in Qatar in May 17. Okay? Around the same time, a draft VAT law was circulated to major industry players. Okay? So they had a chance to have a look at that, including the regulations as well around the same time. Okay? As I said, no final timelines for the release of the legislation at this point in time, but the contents are pretty clear in terms of it hasn't changed that much from the draft. It just depends on the particular concessions given to certain industry players as well. Now, when we talk about the introduction, I think I just finish off here by saying that it could be the 1st of July 2020, but that is not confirmed yet. At this point in time, the General Tax Authority give a consistent message saying that businesses should be prepared, should be ready to the extent possible. It is coming. It's just, I would say it's not a case of if, it's when. Okay, so we can expect some announcements on that over the course of the next number of months. Okay. What I'll do is I'll just touch on what VAT is. For any of you who haven't encountered it before, it is an indirect tax. Okay, so as I mentioned at the start, it's not a tax on profits like a corporate tax or a direct tax. It's an indirect tax which is passed along the supply chain from business to business, okay, embedded in the sales price until it reaches the end-use consumer who bears the burden of the tax itself. Okay. Again, generally speaking, businesses don't suffer a tax cost as a result of VAT because usually they can reclaim it. And on the next slide, I'll show you how that actually works. Okay. VAT applies on the supply of goods and services. Okay, so different to a sales tax. Some of you might have encountered a sales tax before. Like, for example, in the US, it's sales tax. So sales tax is slightly different because it applies on goods, okay, not services. And it's usually only at the very end stage of the supply chain. So sales tax is usually applied by a retailer on the sale to the customer, okay? VAT is different because it applies on goods and services, and it's all the way along the supply chain, okay? So from the very start, a business has to apply the appropriate rate of VAT on its supply, okay? So maybe if I just show you an example of that, okay? Okay, so this is where we have the standard rate of VAT. So I think most of you are already aware that the standard rate in the GCC will be 5% initially, okay? Most likely, eventually, that rate will increase once the system is effective, okay? So a standard rate of VAT of 5% is very low by international standards, but that was a policy decision taken by the GCC governments, you know, for the initial implementation period, because this is a region that traditionally didn't have indirect taxes, okay? So if we look here, this gives a good example of how VAT passes along the supply chain. So on the left-hand side, we have a supplier, okay? So supplier is supplying to the company, and then the company is supplying to the customer. Now, if we look at it from the middle entity perspective, in other words, the company, okay, so we have, just check if this pointer is working. Okay, perfect. So we have a supply here. So the supplier is supplying to the company, and the sales price is 5 million. Post VAT, that supplier will have to charge the company 5 million plus 5% VAT, okay? So he's going to charge him basically 5.25, okay? The company is going to pay the 5.25, okay? The company onward supplies to the customer, and the company is selling to the customer at a value of 10 million. Again, the company has to charge an additional 5% on top of the selling price, okay? So the company is going to charge the customer 10.5 million. Now, these VAT elements here are not the revenue of either the supplier or the company. They are VAT, or value-added tax, which is collected on behalf of the government. So this is effectively the government's cash flow. Because what happens is, the company, when it files its VAT return, it's going to declare the output VAT of 500,000, which it collected from the customer, okay, as output VAT. In other words, the amount that it is liable to pay to the tax authority. But at the same time, because as you will recall, VAT is generally not a tax cost to businesses, so when the company purchased from the supplier, it had to pay 5.25 million, of which 250,000 was VAT. It's allowed to claim a credit in its VAT return for the 250,000. Okay? And the company only pays the net amount to the tax authority. Yes, it declares the output, but it has already paid effectively 250,000 of VAT. So it's only going to pay the net to the tax authority, which is 250,000. Okay. Now, if we think about it from the customer's perspective, they're going to be charged 10.5 million. If this customer is the end-use consumer, in other words, it is not a business, it's not VAT registered, then this 500,000 of VAT, the burden rests with the customer, okay? Because they have no mechanism to reclaim it. Okay. If I look at it from the supplier's perspective, it's not illustrated here, but if I look at it from their perspective, they're selling to the company. Okay, so let's say this supplier is at the very start of the supply chain and they don't have any purchases. They're selling to the company 5 million and they're adding on the 5% VAT. And if I was to look at this supplier's VAT return, they would have output VAT of 250,000. They would have no input VAT, and again, it would be a net payable of 250,000. So hopefully you can see that the total VAT that the government is actually going to earn from this supply chain is the 500,000, but they're going to collect that over 2 stages. They're going to collect 250 from this company, and they're going to collect 250 from this supplier when they file their VAT return. I hope that's clear, and that you can see how VAT is not a tax cost to businesses, okay? So it's effectively an out and an in transaction, okay? In general. Okay, so that's our standard rate of VAT. Now, there's also 2 other different types of VAT treatments in the GCC, zero rated and exempt. You will see in other countries that they have multiple VAT rates depending on what the supply is. But here, it's a bit more straightforward. We just have the 3 different treatments to contend with. So what I'll do is I'll show you an example of the zero rated treatment, and hopefully this will make sense as well. So it's the same illustration, the same example. Okay, so we have our 250 of input coming here. Now this company is exporting. So once you're exporting, whether it's goods or services, you charge VAT at 0%. Because if you think about it, a customer who's based abroad, if they're going to be charged 5% Qatar VAT, they have no mechanism to reclaim that. That business has no mechanism to reclaim because they're not based in Qatar. So if exports were to be VATable, it would make a country, for example Qatar, very uncompetitive from an international business perspective. Okay? So that's why exports are always zero rated in a VAT regime. How does that actually work then? So here, our sales is still 10 million. We're charging VAT at 0%, okay? Which means our output VAT is 0, but we're still allowed to reclaim the 250,000 of input VAT, which effectively means that this company is going to be claiming a refund of 250,000 from the government, which they are, of course, entitled to receive. Now, I mentioned a few minutes ago about a lot of discussions with the oil and gas industry and the tax authority, because, of course, the majority of what the oil and gas industry produces in Qatar is exported, which means that those entities are in this situation, which is all very nice, but the question, of course, is how long will it take for the government to actually issue the refund? And that's their major concern, because, of course, it would be a huge cash flow impact if they had to wait for a long time. In Saudi, for example, it took a year for them to issue any refunds, okay? And that's a pretty decent VAT regime, okay? So they're pretty organized, and it still took a year. So you can imagine the concerns in terms of actually that time frame and waiting for that refund, because that cash flow amount, that amount is massive, and it's a major concern for those entities working in the oil and gas sector. So that's why there's a lot of discussions at the moment between the tax authority and the oil and gas sector in terms of how to address this, okay? So we'll see what the final concessions are when they actually come out. If I look at what else is zero rated, just for your information, it's pretty broad in the GCC framework in terms of what the country, the individual country can zero rate. Basic foodstuffs, for example, can be zero rated. They are in Bahrain, but they're not in Saudi or UAE. Okay, so you can see the differences between the countries as well in terms of the treatments that they're actually applying. You can also zero rate certain transactions in the real estate sector and the transportation sector as well. So international transportation, for example, will be zero rated. So when you purchase your airline ticket from Qatar Airways, you will not be charged VAT. International transportation is always zero rated. Okay? Zero rating is, of course, good news for the end use consumer because you're not going to pay the additional 5% VAT. Okay? So that's the standard rate and the zero rate. Now, the last treatment that I want to just touch on is the exempt treatment. Just at the outset, I want to highlight that very often when I go into businesses who haven't encountered VAT previously, the first thing that they say to me is, we want our activities to be exempted from VAT. And I have to explain to them that actually that is definitely not the treatment that you want for your activities. Let me explain. Okay, so what happens with exempt? If I engage in an exempt activity, I cannot charge VAT onto my customer, but different to the zero rating, because I cannot reclaim the VAT that I suffer. Okay? Here, we'll see the example. Same scenario, purchase of 5 million plus 250,000 of VAT. This company is engaged in an exempt activity. It cannot charge the customer VAT. We're just looking at Islamic finance example here. This 250,000, the company has to pay it, and they have no mechanism to reclaim it, okay, because it is an exempt activity. So in other words, this is when, and I did always caveat when I said in general, that is not a tax cost to businesses, because in certain instances it is, for example here. Okay, what is exempt? Financial services is the major one that has a lot of exemptions. Okay, so the majority, I would say, of certain banks, their activities will be exempt. So anything that is, like for example, interest, profit spread, anything that is an implicit fee is going to be exempted. There will be some activities that banks do that is VATable. For example, pure service fees that are based on an explicit charge, that will be VATable. But a lot of what banks do will be exempt. And that's why banks will be hugely impacted by VAT, because it will comprise an additional cost for them. I have done a lot of the major banks, the implementations in the GCC. They're extremely complex because of the nature of the products, the services, etc. You have to really split them down into the different elements, see what's VATable, what's exempt. Islamic finance as well gives rise to complexities. What they try to do is achieve parity between Islamic finance and conventional finance products in order to ensure that there's no disadvantage. So you have to drill down into what is the transaction here. Is there, for example, a permanent passing of title when we talk about some of the Islamic finance products, in order to determine the treatment that's applicable, okay? But it is very, very complex, a complex exercise for banks, and will comprise an additional cost for banks. In terms of what else is exempt, education and healthcare is generally exempt as well. Okay, so there's implications there for businesses operating in those sectors as well. But I think financial services is the one that's really complex and very much impacted by VAT. Okay. I just want to, hopefully that gives you a good flavour anyway, but I just want to show you then this summary. So basically you can see here our exempt treatment. So when you're analysing a transaction, okay, first of all, you need to determine that it's within the scope of VAT. So it's a transaction that's undertaken in Qatar by a Qatar VAT registered business. It's an economic transaction. It's a supply of goods or services in exchange for consideration. So there's quite a lot of elements that have to be fulfilled in order to even reach the first point. Then you need to look at the actual activity itself, the supply of the good or the supply of the service. Is it something that's listed as exempt in the legislation? If so, then it's going to be no VAT on the sale, and you're not going to be able to recover the VAT on the purchases attributable to that activity. If it's not exempt, then it's taxable, okay? And there will also be a schedule of zero-rated activities, okay? So you would need to check, does my activity fall within this list? If not, then it's going to be the default, which is 5% VATable. There will not be a list of activities that are 5% VATable. That's the default rule, okay? So if you don't fall within the exempt or the zero-rated in the legislation, then you're back to your 5% VATable. You have to apply it on top of the sales price, okay? Hopefully that's given you a flavour for how VAT actually works in the GCC. I'll just move on now to the implementation itself. Okay, so I mentioned at the outset that this is not just a finance function issue, and hopefully having looked at how VAT actually works, that has become a bit more apparent, okay? So definitely this is not something that can be managed within a finance department. I've seen that attempted before and it never works out. It's not a happy ending. So when you start a VAT implementation project, you really have to get buy-in from the stakeholders across the organisation. And it has to be a really concerted team effort to actually make sure that it's implemented correctly. Now, your IT, so clearly the automation of the VAT applicable on the supplies is very, very key. You cannot do VAT manually. When you think about the number of transactions a large business would do each day and the risk of human error if it's not automated, it's far too great. And that's why the IT plays a huge part, the automation of VAT through your ERP. Some businesses where they have multiple systems, they have to opt for certain other technology, like for example a tax engine, which actually sits on top of all your IT systems and pulls it all together. It's probably something I could talk for the next hour about, but considering the time constraints, I suppose I just want to highlight the importance really of IT. It's not just even from the automation of the VAT rate, also you will have to issue VAT compliant invoices to your customers, and you will have to ensure that the invoices that you receive from your suppliers are also VAT compliant. Because if you claim a credit in your VAT return based on an invoice from your supplier which does not meet the criteria of a VAT compliant invoice as outlined in the legislation, the tax authority will come in, they'll say, show me the invoice which is valid, which meets all the requirements, based upon which you have claimed this credit. And if you cannot produce that valid VAT invoice, they're going to disallow the credit that you've claimed. Okay? And then you will have underpaid your VAT and you'll be subject to interest and also potentially a fixed penalty as well. Okay? So it's really important that to the extent possible, those processes are actually automated. Okay? Invoice checking, invoice issuance, and then obviously VAT reporting and VAT accounting as well. Procurement. Okay, so procurement, sales and marketing, I suppose, are somewhat linked. Your contracts. Okay, so are you going to enter into contracts that are inclusive or exclusive of VAT? Okay, so that's something that needs to be negotiated at the outset, because in certain instances that can actually impact on your margin. Okay, so procurement, sales and marketing need to be very much aware of VAT and the implications of it on the contracts that they're entering into, on the contracts that they're negotiating. Okay, it's a really contentious issue because in the GCC, obviously VAT came relatively quickly onto the agenda, and in some countries it took a lot of businesses by surprise. So there was a lot of talk of giving relief for long-term contracts, okay? Because basically if a contract is silent and if it doesn't have a VAT clause, then it's deemed to be inclusive of VAT, okay? But the business still has to account for VAT to the tax authority. So we did have certain relief, grandfathering relief. In Saudi, it was for a year or until the contract finished, whichever was earlier, which meant that the contract could be treated as zero rated. In Bahrain, we have certain relief for contracts with government bodies, but it is very limited. So that's why when we do the implementation projects, we go through all of the contracts to see what are the terms and conditions that have been agreed to and renegotiate those contracts prior to the introduction of VAT where possible, to ensure that the business doesn't end up in a situation where it cannot charge VAT on top of the sales price, but it still has to account for VAT to the tax authority. Okay. Obviously, from a business perspective, your operating model will change. Okay. You talk about reputational risk as well in terms of not being compliant with VAT with the tax authority. Okay, so generally VAT goes to the very top of the organisation. It is a major concern for most of the stakeholders. HR do get very involved as well because fringe benefits given to employees may be VATable. Okay, so let's say, for example, I'm sure most of you are given mobile phones by your employers. Okay, now if you use those mobile phones for personal calls, your company cannot reclaim the VAT that's going to be charged by Ooredoo or Vodafone. Okay, on the personal call element. Okay, so it gets very complex. Okay, so that's why HR generally get involved at the outset to capture all of the fringe benefits given to employees to ensure that the correct VAT treatment is applied. There will be certain elements that will be costs to businesses, okay, because they cannot reclaim the input VAT. Training as well across the organisation is hugely important so that there is an awareness and there's an understanding, different levels of understanding depending on what the individual's role is in the organisation. Finance and compliance, of course, do play a major part in the implementation project itself. Generally speaking, the tax function will sit within the finance function, and it's likely that most businesses will have to have somebody where they may not have had somebody in-house before. They may actually need to now look at recruiting somebody full-time. The frequency of filing of VAT returns is generally much more often than corporate tax. Usually for corporate tax, you file your return once a year. For VAT, the minimum time frame will be quarterly, and in some cases it will be monthly as well for larger businesses. So usually what we see is businesses do actually bring somebody full-time in-house when VAT is introduced, where it might not have been necessary before. Also, of course, in terms of dealing with the tax authority, filing the returns, and actually fulfilling all of the obligations that's required under the VAT legislation falls within finance as well. Okay. So hopefully that gives you a flavour for the implementation. Why I mentioned as well the fact that it does take quite a considerable period of time to actually implement. You can imagine even gathering all the stakeholders necessary to actually tick all the boxes of all the functions here on the screen. It does take quite a considerable period of time. Okay. Now, I did talk a little bit about some of this before, but this just really summarises the VAT on specific industries. So some of the issues, oil and gas, so special VAT treatments, particularly for upstream activities, is highly likely. Very complex process. Even the agreements themselves that have been negotiated, and some of them have been negotiated like 20 years ago, they're very complex from a VAT perspective, so they all need to be analysed. Financial services, I talked about the exemption as well a little bit already. Real estate is an interesting one. Real estate is pretty complex as well from a VAT perspective because you have different VAT treatments. Okay, so the sale of a property will be treated differently to the lease of a property. Generally speaking, residential leasing will be exempt, whereas commercial leasing is VATable. The sale of undeveloped land is generally exempt, and then you get different VAT treatments in different countries as well. So for example, in Saudi, if you purchase a residential property, it's VATable, but Saudi nationals can claim a refund, whereas in UAE, it is exempt. Okay, so different treatments as well in different countries. And obviously depending on the nature of the property itself, is it commercial, is it residential? Okay. Retail, because of the nature and because of the amount of goods, that tends to be very complex, and it has to all be coded through point of sale systems. Telecoms I talked a little bit as well about already. So again, there's special place of supply rules for electronically supplied services, so that all needs to be analysed. Okay, so your outbound roaming should be zero rated in theory. Your domestic will be VATable. Transportation as well. International transportation is zero rated, but domestic, we need to see what the final treatment will be. And again, it varies across the countries. For the automotive industry, there is a special scheme for second-hand cars called the margin scheme, where you just apply VAT on the margin. That gives rise to complexities for automobile dealers. Okay, so that's something to bear in mind as well. Warranties, repairs under warranty, is that VATable or not? Okay, so these kind of questions need to be addressed. And then manufacturing as well. So where you have transfer of materials within the GCC, how does that get treated from a VAT perspective? One thing that I should have pointed out earlier is that VAT is not replacing customs duty. Okay, so when you import now, or rather once VAT goes live in Qatar, when you import, you'll pay 5% customs duty, and then you'll pay 5% VAT on the landed cost. Okay, so it'll be basically the CIF value plus the cost of final transportation to the end destination plus customs. Okay, but if you're a VATable business, of course, you can reclaim that as your input VAT.
Can you give them time for questions?
Yeah. Okay, so this is the project plan. I'm not going to go into details on this because I want to leave time for questions as well, which hopefully I can address. But this is just to give you a broad idea of the various phases that you need to go through in order to actually implement. Okay. Yeah, so happy to take any questions. This gentleman. This gentleman there.
Okay, my concern is about the taxable user services and the exit. And regarding the taxable user services, as I understand, the government will charge a value-added tax on each level of the supply chain, right? So the only impact will be on the end consumer. What will be the impact on the prices at the end? There will be a huge increase. The second thing is regard to the exit. The financial service especially, the probability for them to cost to be okay?
Yeah.
This one. What will be the but also the interest rate we take especially on the banks?
Yeah.
Yeah. It will be also people will be controlled.
Yeah. Okay, so basically with the end use customer, you're going to pay an extra 5% on anything that you purchase, okay? But it's not a cumulative effect. It's just going to be a 5% because of the reclaim system that goes all the way through the supply chain. So pretty much for everything that we buy after the introduction of VAT, we can expect to pay an extra 5% on the final selling price. Okay, does that answer your question? The first part? Yeah. Yeah. Okay, so basically in terms of the banks, okay, so the central bank regulates, of course, the interest rates, and that won't change. And we do anticipate that they will be extremely cautious about the introduction of VAT. There will be certain, and we do see it with other jurisdictions as well, there will be a certain amount of attempt to pass on additional, let's say, cost to the customers. But generally speaking, it doesn't really work in financial services because it's highly regulated. Okay? And that's what we saw in the other GCC countries as well when they introduced VAT. So there was actually a big mix-up in UAE because first of all, the central bank said, no, the schedule of charges is exclusive of VAT, so you can charge on the additional 5%. So all the banks configured their IT systems on that basis. Then a month later, they changed their mind, so they had to reconfigure again. And then a couple of months later, they changed their mind again. Okay, so we need to see how it's actually going to work, but it will be regulated, highly regulated. So in that sense, the banks generally can't pass it on in the form of hidden VAT. Does that answer?
Hi, just a quick question. With all the new legislation, wouldn't it be logical to introduce a tax court into Saudi Arabia, Abu Dhabi, to make rulings on different tax laws and different interpretations of all?
Yeah, so that happens in each country at a domestic level. So, like say for example in Saudi, if you have a question on what is the VAT treatment applicable, you can apply for a ruling. Okay, so it usually happens at the domestic level. So you will see that in Qatar as well when they introduce VAT, that there'll be the possibility to apply for a ruling. The interesting thing in the GCC though is that we have a multi-jurisdictional single market for VAT purposes, very similar to the EU. And there is going to come a time where, like the European Court of Justice plays a huge part in the interpretation of the EU VAT directive and how each country is implementing it. Now, the GCC Secretariat should fulfill that function when we get to the stage where there's questions over whether a country has actually implemented or not. They do actually do that for customs as well, the GCC Secretariat. Yeah. Sorry.
Good morning. Thanks for the discussion. I have two questions. First, at which point of time VAT will be payable to government? Is at the time of issuing the invoice or collect the money from the customer? And the second is, for a group of company, whether head office allocation or parents company allocation is subject to that.
Okay, so very good questions. So the first question, now the timing of actually paying VAT is as follows, okay? So let's say we're working on a quarterly basis. Once you issue your invoice, that is your tax point, okay? So basically, let's say we're talking about Jan to March, okay? Let's say you issue your invoice on the 31st of March. Technically speaking, that is your tax point. That's when VAT becomes due to the government. You will have a 30-day time frame within which you will have to file your return. Okay, so you'll have up until the 30th of April. You pay and file at the same time. So what I'm saying is that invoice, that VAT amount on the invoice issued on the 31st of March, that actually becomes due and payable to the government by the 30th of April, regardless of whether your customer has paid you or not. Okay, cash flow, definitely a cash flow issue again, depending on the credit terms that you've agreed with your customer. Okay. Your second question, transactions between a branch and a head office should in general not be VATable because it's the same legal entity. You can't make a supply to yourself. Okay.
Hi, just a quick question. What about, let's say, between business and business transactions? Let's say I sell a finished good, but it is highly perishable. So for the business owner, he won't be able to sell it. But for the supplier, he will be charged, or let's say business owner will be charged with VAT.
Yeah.
So what would be the transaction to show refund or not?
So basically what happens in that scenario is once you issue your customer with a VAT compliant invoice, they can reclaim the input VAT based on the date of that invoice, regardless of whether they have sold it or not. You don't need to match a sale with a purchase, okay? So basically it's even if he hangs on to the good for like 5 years, that's fine. He will have reclaimed the input VAT once you issue him with the invoice. Yeah.
Last question.
Many thanks for your presentation. I just have one question regarding the time. Do you think the time of the implementation of the VAT in all GCC countries, since these countries, the main contributor to these countries' economies is, the oil and gas, but as you might be aware that the oil prices suddenly they dropped significantly during maybe 2015-16.
Yeah.
And still it's not the market is the retail market or the economy is in a kind of a slight recession. So do you think that it will also negatively impact the retail industry in Qatar especially?
Yeah, I mean, definitely I would say the discussions on VAT and the kickstart of VAT in 2016 was definitely driven by the market situation in some GCC countries. Actually, there was a real need for revenues in some GCC countries. They were under massive pressure to do that. I suppose really the key for Qatar, because of the importance of the energy industry, is to ensure that the VAT treatment that's going to be applicable avoids any of the negative possibilities, for example, from the cash flow perspective. It is something that was, I would say, not very popular in Qatar, VAT. And it's something that was, well, basically the GCC as a whole had made the decision to implement. It's not that there is that need for the revenues here, but I think that once they have the correct VAT treatment for the energy sector, that's not going to negatively impact, then it should in theory be pretty smooth. That's my view anyway, but yeah. Yeah, so I think we've run out of time. I hope I addressed your questions. I know some of you had some more, but I'll try and catch up with you over the course of the next few minutes. And yeah, thank you so much, and I hope that was informative of what's coming ahead.